Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. Welcome back to the show, Bob.
Yeah, hi, Jim. Here we are again.
The U.S. Fed hiked interest rates as expected, and they say they're going to continue to do so. What does that tell us about the future of the financial markets?
Well, you know me. The Fed is a fraud and a fake and a phony, because they follow changes in market rates of interest. And let's define this as when the Fed changes interest rates, that's the administered rate, something like they now call it Fed funds. At one time they called it the discount rate. And believe it or not, even further back, the senior central bank called it the re-discount rate. So at any rate, the market forces are very powerful. And at the end of a big, or going up a boom, short-dated market rates of interest, which are best represented by U.S. Treasury bill rates, the 3 months, they go up in a boom. And interest rates like that in a boom have been going up as far back in financial history as you can go. So anyways, and then, of course, through this last year, the pundits have been officially worrying about interest rates and focusing on the Fed. And what we know is in the past, when the T-bill rate is going up, the boom is on. And when the T-bill rate goes down, the boom is over. And then some months after the T-bill rate turning down, then the Federal Reserve or the Bank of Canada will then cut their administered rate, getting in line with what market forces are doing. And, of course, Jim, the irony is all the wages that get paid to Wall Street experts who follow the Fed. That's a lot of nonsense. So at any rate, on the Treasury bill rate, which has been climbing, the chart now is registering a technical excess. So this suggests that the market rates of interest at the short end are soon to reverse and head down. So we're going to go back to 2007 on that bubble. And in late August, early September, the interest rates and credit markets were getting a little strained. So pundits started to worry about the excesses in the stock market and then touted the idea that, oh, don't worry because the Fed will soon cut rates. And indeed, the Fed did soon cut rates right down to 0%, of course, following the Treasury bill. But we haven't seen any of that yet, but I expect it'll show. But it's one of these things, Jim, where the theory is superior to reality. Because if you look back in business history for 300 years or wherever you've got data, short interest rates go up in the boom, and short interest rates go down in the bust. And indeed, you have the fastest drops in interest rates during the worst part of the bear market. And yet, these Wall Street spokesmen will say, oh, the Fed's going to cut rates and it'll help us. I mean, it's bizarre. But anyways, we'll be watching for it. So the conclusion on short rates is technically the move is probably very close to ending. And it'll be very exciting when the short rates do turn down. The other one that's been very helpful to the stock market has been crude oil, and its price recently has been reinvigorated. It had pretty good momentum going up to 75 a number of weeks ago, and then corrected, and here we are now. But there's analysis, seasonal analysis, and a number of years ago, the typical season at this time of year would be that crude oil would rally up until late September, early October. And then maybe for almost a decade that went away and it was a different seasonality. But here we are, firming crude oil prices into late September, early October. So you got to watch that one, because no matter what seasonality you were looking at, crude oil can clock very severe lows in December, January of the year. And then the other one we watch would be base metals, and copper. It can set a low in November. We talk from time to time about lumber, and that was a fabulous rally up to $640. It's now in the 300s, but getting oversold. And the seasonality on that one is it can have a low in October. So maybe lumber's putting in the lows now. But mainly, the cotton is also did a nice rally up to June and then is giving up. And so I think the nemesis to the big markets is another leg down for base metals, a decline in crude oil, and there could be some concerns about liquidity and things like that. So we're at a very interesting time of the year when, if something's going to go wrong, it may be discovered in October.
We'll have more with Bob Hoye right after the break.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
Welcome back. We're chatting with Bob Hoye. Bob, I just heard an interview on Bloomberg where they said the Donald Trump tax cuts and his cutting of regulation is just the start of good economic news for the business community. What's your opinion on that?
Oh, yeah, it's a good start. I think this is where he addressed the United Nations General Assembly a few days ago, and he said that his administration had accomplished a lot, and the rest in the meeting assembly sort of laughed at that a bit, because he's been reducing the size of government, and reducing the number of regulations, and reducing the number of employees. So making great accomplishments in government by making it less was the irony. And then Trump then said something about it, and then that, of course, got the major laugh because it was a genial remark. But yeah, he is making great headway. We are in times when I've called it a great reformation has been possible. The last one really got underway in the early 1600s when most folk had had enough of, then it was big church and big government, and nowadays it's big business and big government. And it was too much of in your face and in your wallet government, and ordinary folks eventually figure it out and say, hey, enough, and we're going to try and reduce the burden of the predatory state, which is going on now. So, yes, we are on a major reformation, and I think there will be further reductions of intrusion by the state in ordinary life. But it may be, it won't prolong a bull market. If you have a mature stock market and the credit markets are doing what they do late in a cycle, then one has to be wary of a correction, a major correction to it. But I think that a recession with a bear market, when it comes, the folks are going to look at it and say, look, the central bank have taken trillions of our dollars and thrown it in the financial markets, which made things like houses very expensive. And this is all idiocy. So a contraction, I think, would reinforce the urge to reform excessive government and excessive intrusion. So, Jim, we live in very exciting times politically. I'm eager to see each week as it comes along. It's wonderful.
We'll have more with Bob Hoye right after this.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineered gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Bob Hoye. Bob, it's expected next week that they're going to announce LNG Canada for Kitimat, a $40 billion project. Is it good news that finally free enterprise money is about to be let loose in British Columbia?
Oh yeah, this is a good step. I guess at the moment the crowd thinks that, well, natural gas is clean. This is a positive thing. It could lead to a diminished opposition to further economic expansions, maybe other pipelines and stuff like that. But this would be also part of the reform. But on the nearer term here, Jim, in the stock market, we watch there's an index, there's a sector called the broker-dealers, and you know what that means. And the symbol is XBD, and it zoomed up to 303 in March, and it was a strong enough rally that it triggered off all of our bells and whistles technically, and then it's been a series of lower highs and lower lows, and as of this morning, it took out a new low. Now, the financial side, like the XBD and also the broker-dealers, or also the banks, BKX, they can lead the stock market, and while the March high was a while ago now, I think the key thing here now is the new low for an important financial sector. So a bit of a caution in here. The yield curve, everybody's talking about the yield curve. It hasn't done much in the last month and a half, but it is no longer flattening, and flattening is part of the boom condition. The credit spreads, which is the difference between high-grade and low-grade bonds, they've been acting well for the last few weeks. That would be helped by the firming of crude oil. So, Jim, I think we're looking for change, and we're in the season when change can suddenly appear. So, fascinating markets.
Going back to crude for a moment, last year was kind of an exception to the rule where crude oil prices remained strong throughout the winter when usually they fall. Could we have another winter like that?
No, I'm thinking the seasonals, because you got seasonals in the base metals as well. So I think the seasonal forces will be in play on these important industrial commodities, mainly the base metals, including copper, and also crude oil. It's looking good now, but let's watch for the change. And again, it feeds into the bond markets, whereby with a good oil price, Wall Street underwrites more junk bonds for the oil industry, and then the price of crude goes down, and it not only knocks the yield up for oil company bonds, but that then spreads to other low-grade securities. So we would watch for a widening of credit spreads to begin fairly soon.
Bob, thank you so much for chatting with us.
Fun to be with you, Jim, and we look forward to next week.
My guest has been market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. If you have any questions for Bob or any of our other guests, you can send them to info@housestreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.